Hello, guys. Richard Williams Jr. here from Profits of Forex. And before I get started, guys, if you're new to the channel, like, subscribe, follow us over here on YouTube, help recommend our videos, and help us support this channel over here on YouTube as well. As go over to our Facebook group and request a free invite to the Profits of Forex group and join the conversation over there, guys, as well. We look forward to growing and sharing with you guys as well over there as well. And just comment in the section below if there's things that you would like to learn or like for us to go over, explain more in detail. Definitely let us know, and that's what we're here for. We definitely will get back to you in the comment section and join the conversation as well. All right, guys. So with that being said, today I wanted to share with you guys really a nice short video, but I wanted to go over a nice little strategy you guys can use if you're just starting out and maybe you're new to trading and you don't know where to start, but you want to know how you can get in the market and maybe potentially be able to grow your account while you're learning. And I know how that was when I was starting out in that journey and not being able to just know something, and sometimes it's about just having something that you can use for the moment as you grow and you expand your learning in Forex and become a more elite trader. So with that being said, I wanted to go over a strategy in this video, which I'm going to create a series off of sharing different strategies that you guys can use if you're just starting now, or maybe potentially aren't just starting out, but you're just in between finding the right strategy for you. Everything doesn't work for everybody, and hopefully this will help you guys in your journey as a trader. So the strategy I wanted to share with you guys today is what we call the single moving average strategy. It's just taking basically a exponential moving average and using that to basically give you an entry into the market. I'll go a little bit more in detail and kind of help you be able to filter out when you should probably get in the market using the moving average, but we'll go through the basis of the actual strategy first. All right. So first, what you want to do is we want to go over to our indicators, right? And we want to look up moving averages. Now, I already have this saved. See, I already have it saved, but you want to look up moving averages, exponential. Right now, this is the way it would look on your chart when you do it. Right now, it's on a 9 period. Let me do this. Settings. So what we want to do is basically this is the length of time in which the moving average projects, basically collects data. This means 9 candles, basically 9 periods from 9 candles to the close of that candle, and then it'll project here and base itself here as the moving average. But what we want to do is we want to use a 20 straight up 20 period, right? That was a 9 period, basically 9 candles back. As far as the length of time to see back and then to project forward. What we want to do is use 20 candles back at the close. This is our at the close, and this is our length of time, and this is the source of which we're saying basically at the close of that candle, we want to look back 20 candles and we want it to be projected forward, and that's what the moving average does. And this is going to allow us, as you can see, look, it cleans up a lot here, right? It got a little bit more smoother, and that's what we want. We want a smoother look, right? Smoother look and smoother feel, right? And with that being said, this is basically your strategy. What we're going to be doing is, and this is on the hour chart. You can use this on the lower time frames as well, guys. So, I'm just using the hour chart for teaching purposes, but you can use any chart, any time frame, it'll work. Now, what you'll see is, and this is what we were talking about, right here is what we would be really choppy. It'd be really, this is what we're consolidating at. The market's consolidating. I would not advise trading in this because the market really isn't going in any direction. It's just building, right? And then you don't want to get caught here or at the bottom of this, and then you have to, stop your trades and all that. So what we want to do is we want a trending market, and this is what it allows us to do. This moving average allows us to be able to see a good moment in which this candle crosses above this moving average, comes back and retests here, right? That red candle comes down. This would be what I would look at as a good entry, right? That's what I would use as a good entry in which to get in the market, and then be basically this would be a buy. Um, and if you got in at that moment, you basically would have got wow, because it's a GBP Audi. That's why 386 pips off of that, right? Um, the reason why we don't trade choppy, consolidating markets is because there's really no actual direction or trend. There's really no way of knowing when the market's going to turn because you want to trade with the trend. So wherever the market's moving, that's what you want to be in. This allows us to see it real clearly, as you can see. And then what we basically would do is you can either choose to hold right here, right? You can choose to hold this up into the point that this red candle, this bearish candle closes right below this, and then you can close out your trade. And even if you did it that way, what you basically would be getting would be 318 pips, right? 318 pips. It's a good day. All right, guys. And you can close out your trade that way. Now, it's the same way if you're going to look for a trade bearish. If the market's trending bearish, and I picked this pair because of this moment right here. It was trending really good, trending really well. Um, you see this close below, and as I said, you get a retest up, right? That's our candle here that we're looking at, right? This is our retest. We see the market comes below this moving average, right? Which indicates the market is becoming bearish, right? And what we're looking for is that retest. And once we get this green candle, we would enter the market here. Like I said, guys, this strategy is it's really simple. It's really straight to the point. If you're looking for a way to gauge when to get in and when to get out, maybe open your position, and then when you can hold it to, this will help you. I'll actually be able to share another video that's going to help basically kind of maybe well it's gonna actually enhance this trading strategy. So I'll build on this trading strategy for you guys, so that you guys can you can use it this way, or you can have another way which can really take your trading to another level just using the strategy. A lot of traders use moving averages in their trading. I did in the beginning as well, and they really they really do work. They help out. It makes it a lot simple. It's just that you may not be up here, catch this move up here, but you'll definitely get in here. And as you can see, this market moved really well underneath this moving average. And basically, as long as she stayed underneath the moving average, this was a sell. See what I'm saying? The price came back up. It retouched this. So this moving average acted as kind of like a support, or resistance support kind of area. And then it came back down and did the same thing, right? And then until price went and closed above this moving average, we could have held. And if you held till then, let's say you got in here, right? We got in our trade there, but we closed right here. That is 469 pips, guys. What I'm trying to show you is that is, sometimes we can overthink it and make it really, really hard. Not that the trading doesn't have its things that you have to learn and put in the work, guys. You do have to put in the work. That's not what I'm saying. What I'm saying is that there are ways that we can make it simplified. We can make it real easy, right? This is easy, okay? I see my entry when price breaks above this moving average, right? And then I get a retest. Now, I'm not trading any of this. I'm not trading any of this consolidation, right? You can tell when it's consolidation. Look, when it hasn't really gone in any direction. You see that box? You see that box? Price hasn't really gone in any direction, right? at all, any direction, right? So we're not trading that at all, right? What we're doing is we're trading the trend. Right here, you can see when the moving average starts to even pull away from price, that's the indication of volume, right? That's the indication of the market motivation, being motivated to buy the market or motivated to push the market up or mark prices up. So that's what you're looking at, right? And then on the reverse side, you see when price is being marked down, price is being pushed bearish, right? You can see that as long as it stays below the moving average, right, you can hold this trade. As long as it stays below this, you can hold this trade and close out and use that as your exit and use this as your entry, right? Your entry is I get in at the break of price coming below the moving average in a retest, right? Well, I get out when price comes above it, right? As soon as price closes above it, I close my trade. Real simple, guys. So I wanted to share this with you guys because, sometimes we're trying to find a way to go through and maybe make money in the market. And this way it will help keep you from being having some kind of direction in the market as well. Um, Let me look at another pair. Maybe we can do. See, look, oh, perfect. We'll go to this. This is a Audi JPY. Look at Audi JPY. Clear, right? You see this right here. Price breaks below, and guess what it does? It trends beautifully nicely below. We don't close our trade until price comes up above that. And if we don't, we get in and we get the retest right here. Look, we hold it, and price comes up. That is 200. All right, that's 195 pips in the trade, guys. You can do it again over here. It's just multiple times. All you got to do is just follow the strategy, right? Yeah, you might not get in up here, but when price came below here, and you had this below, and then price came back up and then price came down, you can sell the market there, right? You can buy the market here. You see what I'm saying? We're buying the market when the market goes up above, breaks above structure, which it did, breaks above that consolidation in the area where price is accumulating, and it push upward. And then you see it do the same thing when it push downward. Then you see it again over here when price goes and trends up. Look, and it holds. Now, as soon as price broke here, we can close our trade. Real simple, guys. So I wanted to share that, guys, with you because I know we're searching, and I wanted to make it real easy for you guys to have something in your tool belt, something that you can use for the moment. Okay, guys, it doesn't have to be a long-term strategy, and some traders use this as a long-term strategy, right? In the other videos, I'm going to show you how you can actually build on this strategy and take it to another advanced level and really go more in depth and give you more confirmations and more confidence trading this particular strategy and what we're going to be looking for. So in that video, I look forward to talking to you guys. If you just tuning in, I hope this video has helped you guys. If we can do better, let me know. But I look forward to seeing you guys in the next video. Like, subscribe, follow us here on YouTube, comment in the comment section below. Go over to Facebook, join the Facebook group. It's free. Ask for an invite, guys. Ask for an invite, right? And join the conversation over there. And I look forward to seeing you guys in the next video. All right. Till then, this is Richard Williams Jr. from Profits of Forex, where trading is simplified.